Okay, so good morning, everybody. And we were talking about today's format, and Angela asked me if I would just kind of do a recap of what we talked about on Mindful Monday. So this will be kind of a shortened version of it, but I think to just kind of kick off, what we're talking about with the shifts in the market, and really, like, how do we increase our awareness and how do we operate, effectively when there's shifts in markets. And we started on Monday. So for some of you who are on Mindful Monday, of course, this will be a repeat. So I appreciate your patience on it. But so let's just understand what a market is, and I'll just read this to you real quick. So in economics, a market is a composition of systems, institutions, procedures, social relationships, and/or infrastructures where parties engage in exchange. So when you take a look at that definition of what a market is, there's 4 or 5 things in there, okay, all of which operate independently. And so one of the things we have to understand about markets is that they're complex, and that there's lots of things that have to happen simultaneously for markets to do well or actually to not do well. But all these, if you think about it in terms of like being like gears, okay? When markets are moving well, okay, it's like the gears are all synced up. When markets don't do well, you got some parts, it's like grinding gears, right, where things aren't working well. And so markets, because of their complexity, okay, are going to do their thing, right? We have really no control over that. But here's what we do control, okay? We control how we, okay, as an organization and as an individual, how we interact with the market as it changes, okay? That's what we control. So the fact that a market's going to change, or the economy is going to change, or something around us changes, you know what? You guys know me pretty well. I put that in the so what category, right? So what? It's going to change. What are we going to do about it? What am I going to do about it? How am I going to interact with it? Okay, because really all we control is the interaction. And so what we talked about on Monday is, and we're going to go a little bit deeper into this this coming Monday as well. So there's 7 points that when we're in a shifting market, and it could be personal as well, okay? When things are shifting around us, there's 7 things that we've kind of highlighted that you can do, right? First is become educated, okay? Understand what's going on around you. Next is get curious. Like, well, why is it doing that? Okay. And kind of go into observation mode. Next is exchange observations with others. And, we've been talking about, getting back into the office. I mean, exchange ideas and exchange observations with others. Because once you open up your aperture and you can start to get information from other people, it helps you round out your view of things. Next is evaluate your strategies and tactics, okay? So like we know, right, that we need listings, okay? That's strategy, right? Well, what are the tactics, okay? And we were talking about this, on Monday, last week, I heard someone mention something about expired listings. Well, when was the last time we actually had a discussion about expired listings, right? So what are our strategies and what are our tactics, okay? Strategy is we need listings. Tactics, well, how do we get them, right? Market shifting a little bit, right? So, do we go back to some things that we used to do? Do we think about, new things? Do we do, more with our sphere of influence? All those types of things. Next is be realistic. And one of my favorite expressions is that hope is not a strategy. So if we're hoping that the market's going to go back to the way it was a year ago, that's not a particularly good strategy. It's not particularly realistic, okay? It's not going to happen, all right? So we're still going to have a very good market, okay? But it's not going to be, what it was, when purchase and sales agreements were falling from the sky, okay? So hope is not a strategy. Next is write down the changes you're going to make. It doesn't need to be elaborate. You can do it in a journal. You can send yourself a text. However you do it, okay? Or write down write down the changes you're going to make. If you write them down, you'll be more committed to them, and it gives you the opportunity to reflect as time goes on and change it. And then lastly, get moving, okay? All success is about forward movement. It doesn't need to be perfect, okay? Just move, keep moving, right? Now, so these are the 7 things that we should be doing. So let's just talk about the one thing that we don't want to do. This is really tricky graphics here. Wait for it. Okay. Don't do more of what's not working, right? Human nature is that we're wired, okay, to when we're experiencing change or something's not working right, we are just naturally wired to double down twice as much of what wasn't working, okay? And it's the fastest way to get discouraged and exhausted, okay? So don't do more of what's not working. Resist the temptation. And you can do it for a little bit, you know, and you might gain like a little bit incrementally, right? But necessarily, you know, working harder and doubling down, okay, isn't necessarily going to get you anywhere, right? This is about the tactics and strategies, reevaluating that and changing, you know, what's not working, okay? So that's what we talked about on Monday, and I hope that helps everybody and just kind of put things into perspective. And we're going to do a deeper dive on that this coming Monday. So thank you. Angela, back to you.
Hey, thanks, Chris. Appreciate that. And always like those Monday calls. So for those of you who haven't been on the Monday calls, here was a great brief intro to it. So appreciate that. Chris, if you could stop your screen share, that would be awesome sauce. And so we have a special guest with us this morning, and I'm really excited to introduce her. Her name is Marli Cole. She is a senior trainer with Better Homes and Gardens Real Estate. And Marli's going to come on and she's going to join us and tell us about some things, a few learning opportunities that are coming up and what's going on with Marli. And for those of you who did the Lead Gen Challenge and the Listing Challenge, you've had an intro to Marli because she ran both of those programs. So Marli, do you want to unmute and come on in and join us?
Thank you. And thank you all so much for having me. This is such a great group and I love the layout of your meetings. Very exciting, and I'm just so grateful to be able to share with you all. We have some incredible learning opportunities for you, and I know that your office has some amazing opportunities for you as well. So this is just like another layer to that cake for you. And I'm really excited to share. If you haven't already joined in our summer classes, we just finished our buyers class. That was 4 sessions long. And coming up this coming Tuesday, we're going to be starting with Sphere of Influence. And it's going to be every Tuesday, again, starting next Tuesday, all the way through September 27th. So if you're looking for learning opportunities, this is a great way to check it out. And I'm happy to share information after on where you can sign up. But all of the information does live on the university, and if you go to the calendar, then you can just click register right from there. So it's really easy. And then as an additional bonus for you all, we're also through the marketing department, they've put together this incredible program all on mastering social media. They have a whole mastering social media series, in fact, and I'm going to put the link in the chat right now just because I know everyone loves learning about social media. And so check that out. It's pre-recorded. You can watch it at your leisure. It's all about learning about the algorithms, learning about different platforms, including TikTok, which is the platform to be on right now. And then also, just in case you're interested in learning more about Social Tool, which is a tool that already exists, I'm going to put that in here as well. You can sign up for the Social Tool session that's coming up on August 31st at 2 p.m. Eastern Time. I'm a visual person, so I like having things available as soon as I hear about them. So go ahead and check that out as well. And then finally, this is just more sharing some info for you. So just so you know, I'm in the learning department, but our marketing department has office hours and they're super underutilized. So if you are looking to get some support, ideas, inspiration, technical help, anything that relates to marketing, they offer marketing hours every Monday from 4 p.m. to 4:30 p.m. Eastern Time. And if you hop in there, then you'll be able to get that personal attention that we pride ourselves on, and would love to have you all hop in so that you can learn a little bit more about how to set up your marketing plans, communication plans, use our tools, and overall grow and streamline your business, which I think is really the goal for everyone at some point, right? I love a set it and forget it tool. That's one of my favorites. So if you have any questions for me, please feel free to let me know, or everyone who's on here, I'll put my email in the chat here as well right now, so you can connect with me as well. And would love to help you however we can, but definitely want to check out the summer classes, because they're just a great way for you to continue your learning, even if you've taken the classes before, and I'm going to put them in here as well. Even if you've taken the classes, it's a great refresher, especially because, and this is the special part, we switched up our trainers. So usually we have our virtual team lead them, but this time it's actually myself. And if you know Jake Durando, our other trainer, who's fantastic, cannot say more about him. And I'm going to be doing the Sphere of Influence training starting Tuesday, and then he's going to be leading off on our Prosper training on August 16th. So would love to have you join. And one last thing that's good to know is you don't have to go to all of the sessions. And if you miss a session, that's okay too. You can hop in at the 4th session, the 3rd session, whatever works for you. Our goal is to make it as available and convenient for you as possible. So if you have any questions, please let me know. Thank you again for having me on here, and I hope that you all have an amazing day. Go out there and kill it, and I'm here if you need me. So thank you again.
Thank you, Marli. And I just want to be clear to everybody so that they really do get that. So the Prosper class is working with sellers, right? It's about listings. And I know we're all looking for listings right now. So is that is correct, right, on Prosper?
That's right. Yeah. So we started with our buyers class, and now we're moving into taking that sphere of influence and then going into the listings to work with sellers. And it's also beyond that. Like, how do you work with a seller? How to get the listings? And then once you have the listings, how are you marketing them? Especially because the market is shifting more towards a buyer's market. So how are you going to work with a seller when you have them as well? Because it's a lot different to be a seller's agent in this market than it was even a year ago.
Absolutely. And just for those of you watching with us this morning, participating with us, Jake did a class. You guys might remember Jake. So Jake did some listing classes with us when we were doing our calls before with the pandemic. If you remember, he and Matt Ferrara teamed up at one point as well. So you should remember Jake. He's pretty dynamic, and I know was really well received by this group. So we thank you so much, Marli, for joining us, and look forward to seeing you on those classes coming up. Appreciate your time.
Thank you all. Hope to see you on Tuesday.
Thanks.
Bye.
And also a reminder for everyone, if you need to get into the greenhouse, it is your first name dot your last name at bhgrealestate.com. And that's how you're going to get in. If you don't remember your password, not a big deal. Just hit password reset. You'll get in there. Go to Be Better University on the left-hand side. That'll automatically go in there for you, and then click on calendar also on your left-hand side, and that's where you'll be able to see all of those classes, as well as we have a bunch of them were listed in the bulletin on Wednesday. So remember, look at Wednesday's bulletin. It's always going to give you what's coming up for classes in Greenhouse, as well as Real Estate Institute of New England. So without further ado, I'm going to turn this over to Rob Gibbons and Cathy Campbell. So they're going to be followed up by Ryan Godbout and Danielle Defelice. Sorry, Danielle. So Rob and Cathy, go ahead and take it away.
Thank you, Angela. Can you hear me all right? Thank you for having us. We appreciate your time. Mark McCauley is on a well-deserved vacation, so we asked Cathy and I to step in and say a few words and share a couple hot topics with you. I do have some opening comments, and then Cathy and I are going to go through about 7 or 8 items that have bubbled up from you in the field, either some reminders or some questions you had about some stuff. So we're hoping to keep it brief. If you want more information on anything we go over, feel free to reach out to us directly after the call, or we can certainly get into it after with some question and answers. First, I just wanted to talk about the importance of the in-house services, both the title and lender. Chris Masiello called me about 20 years ago. I was at Wells Fargo at the time, and he asked me to come out to Keene and just talk to him about joining the mortgage team. Even back then, I was struck with talking to him. It wasn't about high sales, getting more business and that type of thing. To Chris, it was the importance of service to you as the real estate professional, and then also the process for the home buyer being an enjoyable one, stress-free and that type of thing. And it just really struck me that that was his message. I did end up joining the team at that time. The joint venture was with Wells Fargo, but it's a message I think Chris has continued to have throughout the years. And it's, the backbone of why we do the in-house services. I mean, some of the benefits of doing it, there's accountability. We can certainly, make you and your clients a priority. This market is crazy right now. The world is crazy right now. So no matter how proactive we are, problems are going to arise, but you'll be able to reach out to us. We can get Mark involved. We can get our corporate office involved. And if there is a problem, we'll come up with a solution to help you. We're not going to go dark on you. Each of your offices has a great loan officer that you can team up with, and many of them are on the call right now. So that said, I get into some of the items that, again, bubbled up to us. Chris talked a little bit about rates. Rates have, in the last 2 or 3 months, they've been up into the 6.375 range. They're now creeping back down into the mid fives. I mean, things change. I know a lot of people are hoping to still get a 2.875 or 3.25 or that type of thing. But as Chris mentioned, it's a new reality. It's a different world that we just have to accept. If your clients or even you are waiting for rates to get back down in the threes before you're going to take action, unfortunately, you're probably going to be waiting a long time. If you do look at a rate graph, historically, rates are still very low from a historical standpoint. I think a lot of you that have owned homes for a number of years or perhaps been in the business for a number of years have those nightmare stories where you bought a home at 13% and it was a 3-year ARM, that type of thing. Hopefully we're not going to ever get back to that. But again, just keep it in perspective. Oddly enough, I bought my first condo about 25 years ago. And at the time I got 5.5% on a 5-year ARM, and I was ecstatic. I thought I was stealing from the bank at that point. Rates got lower than that, but now we're pretty much back at that level at this time. So things change. They're cyclical, that type of thing. We get a lot of questions if we're going to see the 2008 bubble again. Those of you that lived through it, it was pretty painful. It put us into a bit of a whirlwind for a good 3 or 4 years, but nobody's anticipating that happening again. The biggest reason for that is that the mortgage industry has been doing safer lending practices the last 15 years. Leading up to the bubble, there was a lot of no doc stated income, 100% financing, and frankly, the industry was putting buyers into homes they couldn't afford. That all changed after the 2008 bubble, and we're doing our due diligence to make sure that people can afford their homes that we're putting them into. Most home owners also have a lot of equity right now, so they're not going to be walking away from that. If somebody has 50, 100, 200,000 equity in a home, they're unlikely to just give it back to the bank and walk away. In 2008, a lot of people were chasing the market. They probably overspent, and then when values started coming down, they had no equity or they're upside down. So the common thing a lot of people were doing in that situation was just giving it back to the bank and going to foreclosure. We are seeing supply and demand driving the market at this point, and not the rampant speculation we had from the mid 2000s into the 2008 crash. As you all unfortunately know, listings are still low, demand is still out there. So we're hoping to not see that. Foreclosure levels are slightly higher now than they were prior to pandemic levels, but we're not seeing, we don't foresee that triggering the 2008 bubble like we had before. With the limited inventory, even if a home is foreclosed, there's likely going to be multiple buyers on that are going to keep values up. When the market was saturated with foreclosures, people were lowballing them, and that just pushes all the values down, regardless if a sale was a foreclosure or not. Big question you probably are all getting is, should you buy now? That's a tough question to answer. I've been kind of treating it like the stock market. If you talk to any of the Warren Buffetts out there, they say, if you try to time the market, you're going to get burned. And I think it's a good perspective to take. If you Probably everybody on this call had a client over the last, 2 years, 3 years that said, well, I'm going to wait for the market to crash before I buy. If they bought 2 years ago, they would probably have 20, 30, 40% equity in their home right now. Certainly, if somebody was going to buy a home and try to flip it in 3 to 6 months, they might get burnt. But if somebody's buying a home that they're going to be in for at least 4 to 7 years, they're going to be okay. We might see a little bit of dip in value, but you'll come back around. If you look at home value graphs over the last 40 years, values do dip at times, but over a 7-year period, those values come back up. We saw that obviously after the 2008. So just keep that in perspective. If you have somebody that is currently renting, I think it absolutely makes sense for them to buy right now because rents are skyrocketing. We have people that were paying $1,600, $1,800 a month in rent that are calling us that had their rent go up to $2,500 a month. That dynamic is going to continue. You're going to see your rents go up and up and up. If you get into a mortgage now, you have that fixed payment for the life of the loan. We've gotten some questions on the assumability of mortgages. What that means is if I say bought a home 2 years ago and I had a rate of 3% and Cathy was going to buy my home, she could essentially assume my mortgage, take the mortgage over, and she would get that 3%. It sounds pretty neat to be able to get a rate that's 2-3% below market, but there's some catches there. First and foremost, the homeowner, the mortgage holder, has to verify that their mortgage is even assumable. The vast majority of them probably will not. Some of the FHA and the VA mortgages will be assumable. So once the seller does identify if their mortgage is assumable or not, the home buyer then has to essentially apply with the mortgage servicer to see if they qualify. That process is not going to be a quick call to a CMG loan officer on a Saturday afternoon to get a pre-qual. This is probably going to be a painful process that's going to take you 4 to 6 weeks to see if that buyer can get approved. Probably a process similar to the short sale process, getting those approved back in the 2008, where you'd be calling daily for weeks and weeks and weeks to get an answer. It's something that you can possibly do, but I think there's going to be more challenges to it to make it a viable option. And a big linchpin to that is that, to use that same example, let's say that I bought a home for $300,000 at 3% 2 years ago, but my home is now worth $500,000. If Cathy was to want to assume my mortgage and I agree to it, we line up all the ducks, she can assume my $300,000 mortgage, but she's going to have to come to the table with the down payment funds. You can't increase. She couldn't increase my mortgage of $300,000 to $500,000 and obtain that 3% mortgage. So that buyer is going to have the down payment funds to make up the difference. Quick reminder that if you have any addendums that pop up during the process, please make sure you get those to us in title so we can make sure they get addressed. And lastly, before I hand it over to Cathy, we've got a few questions about CDs going out prior to a loan being clear to close. We will absolutely do that. If a loan is not clear to close and we need to get the CD out, we identify why it's not clear to close, and then we'll issue the CD. A lot of times it might just be something very minor, so it's really a non-issue, and we'll get that CD out. We'll get the clear to close the next day type of thing. You will run into lenders that'll have a hard stop on that. It's not a CFPB regulation. That's an individual lender's regulation that they will not issue the CD until the file is clear to close. So just be aware of that. So with that, I'll hand it over to Cathy.
Thank you so much, Rob. Following up on all of what you said is going to be tough because that was a great talk. I appreciate very much all that you said, and I learned a couple of things myself. One of the things that we've been asked a number of times lately, and it seems kind of silly, but it's not. It keeps coming up. So people are asking when they want to buy a new home and they have a home to sell, can I please just take my mortgage with me? Can I take the mortgage that I have at 2-something% or 3-something% and move it to the new property that I'm going to be purchasing? And the answer is no, you can't do that. It's a whole new deal. Once you sell that property, it's the mortgage loan, the mortgage agreement says that you have to pay it in full. The new property needs to have the title search done. Everything else needs to be done. And there's just no moving that great rate on the mortgage that you have to a new loan. So no, can't do that. Another thing that we want to share with you. Angela, what do I do? Can we mute her?
I muted it. You're all set.
Oh,
Go
thank
ahead.
you so much.
No
Okay.
problem.
All right.
Oh, now you're muted. Oops.
Well, you muted me too. Okay, no problem. All right, so another thing that we want to share with you is about PIWs. PIWs stand for Property Inspection Waivers. Property inspection waivers have nothing to do with home inspections, but do have a lot to do 100% with real estate appraisals. Very often when we get a loan application, it must be a conventional. It must be at least 20% down. And we run that loan through the Fannie Mae and Freddie Mac system. We may be able to get what's called a PIW, Property Inspection Waiver. That means we do not require an appraisal at all. Fannie Mae and Freddie Mac have been, over the last probably 20 years, collecting information individually about real estate, the house prices, everything about the house, how many bedrooms it has, does it have a garage, does it have a fireplace, does it have a deck, does it have a pool, what is everything about this house and what makes it worth what it's worth. They've compilated all of that information and have determined by themselves what the property values are. And if they feel that the particular house that we have run is worth what the seller and the buyer have agreed to pay, then they will waive the requirement for an appraisal. We are able to do this for you for properties that have not even yet gone under contract. The property is going to have an offer made on it by one of your buyers. And if you've got all of the information to the loan officer about them, the buyer has given them everything. We would like to also be able to say that we have all of their documents and they've already been pre-underwritten and approved. We'll run the loan to see if we get a property inspection waiver, and we will put that in the letter that we send to you that you can share with the listing agent and the seller to say that an appraisal is not required. That of course makes the buyer look even better, knowing also that they have been completely underwritten and approved. We don't need an appraisal. Here's what we need: a title search. That's it. We're ready to go. And we happen to know we can get a title search done extremely quickly. The law that we have to follow is we can't close a loan faster than 7 days from when it started. So we could close that loan within 7 days, so long as the buyer is cooperated and we get a property inspection waiver. So that is something actually very helpful. Many lenders, I will say lots and lots of them, will not give you that property inspection waiver until the loan is truly under contract. It does take time. It costs money to do that, but we're willing to do it for our Masiello partners. So it's good. It's a good thing to know. In addition to all of that, we also want to tell you just a little bit more about one of our very unique programs. We have a loan that is unique to CMG. We started it ourselves. We have been offering this program all over the country since 2004. It's called our All-in-One. And I want to give you just a bit of information about this loan, but we also offer a very brief seminar. It's about 45 minutes long. We'll come to you to teach it. And I happen to know you have an absolutely gorgeous new office in South Portland with the space for training that just rivals everybody. It's really wonderful. We would love to be able to put together a seminar for a bunch of you there, but we'll also go wherever you happen to be. So if you're too far from South Portland, unfortunately for you, you might be, because it's really special, but we'll go to you. So what makes this all-in-one loan different from traditional 30-year mortgages is traditional mortgages are fully amortized, where the borrower takes out a fixed rate and the amount of interest the borrower pays is predetermined on day one. The reason it takes so long to fully pay that loan off is it doesn't flip to the borrower paying more towards their principal and less towards their interest until typically around year 19. The all-in-one loan is principal first. You pay the principal on the loan first. It ties with a checking account, and every deposit put into a checking account sweeps over for that day to their mortgage balance, and the interest is determined after the amount that's deposited into your checking account is determined. We are not expecting people to change their financial habits. Everything that they would normally deposit into their checking account would go there. You pay your bills as you normally would, but while the money is parked there, you're paying way less interest, and you have all of the equity in your home available when the day's done. If you are able to pay it down to say nothing or even half after a number of years, you were still able to access all of the equity in your home without having to refinance and pay the closing costs all over again. People do say often, well, I can always pay extra. Yes, you can. And when you do, you're going to owe less money on your loan, and you're going to pay it off sooner, but your payment doesn't go down, and you have no access to the money that you've put in there, which is why most people don't pay extra, because they need their money, right? They're not able to just simply say, I've got an extra $5,000, I'm going to put it in on my mortgage, because they might need that $5,000 to do some repairs to their house, fix their car, buy a new car, who knows? So they just keep their money someplace else. With this loan, you can put it there, pay less interest, pay your mortgage down way faster, and have your equity still available to you. I have just one example. I have a borrower who's buying a second home. They have a home in another state to sell, but they don't want to list their house and sell it before they buy their new house here in Maine. The house actually, in this case, is going to be a second home, and they're going to sell their home in another year and retire here. So once they do, so they get their mortgage, they put 20% down here. Once they sell that home in the other state, they're going to move here permanently, put all of the money on the mortgage, owe nothing. But their financial planner called me just to try to understand what the loan was all about, because the buyer was having a hard time really grasping it. And when I explained it, she said, this is perfect for them. He is older. He has some medical issues. Once he retires and moves here, he's never going to be able to have this kind of borrowing power again. And yet he's going to have this money, you say, for up to 30 years? Yes, that's correct. It's a 30-year loan, and they will have it available for up to 30 years. She's also saying if something happened to him, his wife still has the borrowing power that the all-in-one offers to her as well. And I said, yes, it does. So that's just one example of why this is such a wonderful product. There are so many, and I don't want to waste all your time listening to every single reason I can tell you why it's so great. But again, as I say, we would be happy to give you a seminar. It's about 45 minutes, and it really outlines it and gives you a great understanding of why this could be a perfect loan for any of your buyers. Thank you very much for having us. We appreciate it. And as Rob said, if you've got questions for us, please ask. Reach out to us after. The call is over if you want, or if you've got questions that you want us to answer here, we'd be happy to do that too, if it's not going to take too much time in your call.
Cathy, I'm going to just call on John Kamahalis because he has a question. I'm only going to take a couple questions right now, guys, because I do want to give Great East a chance to chime in here because they're going to play off some of the things that CMG has told you. So John, if you want to unmute now and go ahead and ask your question. I know it came on when Rob was up.
Yeah, my question is a general question, just because I've got all of the marketing and financing and everything in place. And don't get back to me now, but try to get back to me at some point. I'm looking for products to manage seller expectations that show the purchasing power declining based on interest rates, because interest rates, as you know, as they increase, purchasing power of buyers drop. And I'm trying to manage seller expectations by showing them that as these interest rates go up, people can buy less. And you need to understand that as a seller, that there are less people in the pool to buy your home. So if there's any kind of a product that you guys could provide for me that is dumbed down for my sellers, that, you know, is not, I don't need charts and graphs and everything, but just a general aspect that would help me to hand to my sellers and show as an interest rate goes up 0.5 point, purchasing ability goes down $25,000 or whatever that number is. So that's all I wanted to chime in on. I apologize for butting in, but I have to go. So I wanted to make sure I could get that question in while I had everybody on the line. Thanks.
That's a great question, John. Thank you.
All right, thanks, John. We'll get to that.
Right. Anybody else have any questions for these guys before we turn it over to Ryan and Danielle? Because I think that CMG said something about 10 to 14 days to be able to close some loans here. So Ryan and Danielle, you want to come on in and tell us how you can make that happen?
Absolutely. So I did want to play really quick off of what Rob said. He said something that was just so important. The whole fact that CMG gets your CD out if we do not have. There we go. Okay. He highlighted something, and I know he highlighted it briefly, but it's so important. CMG will get a CD out even if we're not clear to close. So the fact that they're shooting for this certain close date, even though you might be waiting on one minute thing, other lenders will not, and I'm speaking from experience, will not necessarily just send that CD out. And that one item could come in at any second. And the fact that they have sent that out, we can get to the closing table, like sometimes just right on track, because that comes in. With other lenders, what you will find is that we'll push it out another 3 days, your closing date, because they haven't disclosed. So I really wanted to highlight that's a really big point that he made there. But yes, going back to title, as Cathy said, within, 7 days, Cathy, you have before you can turn around. We right now, 7, which is amazing. We get our title order in, we get the P&S in from you. Our July average was 4.7 days from the time that we took that order into our inbox to the time that not only the search was back, but that our amazing title attorneys reviewed it and cleared it to close. 4.7 days. I'm really, really proud of it. We all are. That's an insane turnaround. So I would just like to stress that that's how fast we will get that back. Another thing that we're doing to expedite, you may or may not have noticed yet, is we have switched all of our forms, the intro forms, to DocuSign. You guys were screaming for it, and rightfully so. And we have now rolled it out with some great feedback, and we're continuing to change the process, tweak it here and there. But I would love to stress the fact that we are sending out your commission statements that way to get those back in. We're sending out your seller intro letters, your buyer intro letters out via DocuSign, because the faster we can get that intake, that info in, the faster we're like moving and grooving and getting the title and getting everything ready for closing. So with that said, it is so important, if you have an email address for your clients, that would be fantastic if you can provide that from the get-go, because I'm certain you guys don't want to be the in-between when title's trying to get info. You got enough to chase down. So whatever you have when you send in your purchase and sale to one of our sales members in your region for contact info, that's fantastic, because then we're not chasing you for contact info, and we'll be able to get that DocuSign out to your client as fast as possible. That said, what else can we get from you as the agent to really meet this 7-day timeline if we're shooting for that? like I said, contact info. If there's buyer paid commission, that's fantastic. Get that to us in advance. As Rob and Cathy spoke to, that needs to go on the CD. So if it's being financed and going out, we need to get all of that info. The lender needs to be aware before they send out that CD, because it will change the cash to close. So that's really important. Any addendums, if you can get those to us the second they're signed, fantastic. So those sort of things I just really want to highlight. And in addition to that, fuel prorations, I know that's kind of a last minute thing, but I'll let Danielle kind of jump into that. But if you can get that to us in advance, that really does need to be on the CD. Anything that's impacting the buyer side, we need to make sure that we're getting that over to CMG so they can go ahead and disclose. With that said, I will throw it over to Danielle.
Good morning, everyone. Just to, I know Ryan just mentioned fuel prorations. Fuel prorations are not a side deal. I know that comes up quite often at the closing table. Those can still be handled outside of closing with a check back and forth between buyer and seller, because I know those customarily come in last minute. You're getting fuel prorations, you know, at some points up to what the final walkthrough a couple of hours before closing. So please don't panic if you can't get those to either us or the lender, because we'll just do a check. I mean, I won't, but you will just do a check at the table with buyer and seller. So no panic. Yes, amazing. 4.7 days is absolutely amazing. One thing that we also do at Great East is the minute one of my agents, and I'm sure everyone else on this call does, sends me that purchase and sale agreement, we get title started. I know that we have some competitors that wait for the official title order from the lender. We will get title started as soon as you send us that purchase and sale agreement to expedite it. So we're not waiting on anything. Once that 4.7 days is up, we will give you what we call a title summary. That title summary will go out to you via email. At the same time, we're sending all of the title documentation over to CMG for the title to clear. That title summary is basically a snapshot of the title. We're going to give you the property description. It's at this time that if we have, you know, a property description that's all of the property and we're only conveying half of, please let us know that, because if it's not listed on the purchase and sale agreement, we'd have no way of knowing. It's also going to tell you about any encumbrances that you should know. I know you all do your due diligence, but it's just a final check for both us and you to make sure that we have everything needed and we can tell the clients exactly what's going on with title. Ryan, what am I missing?
I think you've covered like most of it. I would just kind of talk about quickly the clear to close to the table, what's happening there. If you want to go ahead.
So Ryan is absolutely right with the fact that CMG will release that closing disclosure, because remember, we're still up against that 3-day rule. We're also all on the same page. So if we have that closing disclosure released to you, CMG is going to say, hey, Danielle, we're good to go, but we're missing an employment verification. You always will have the communication as to why we're waiting, but we're not have to redisclose in another 3 days and wait. I know there's a lot of misconceptions about how the collaboration works. The figures for the closing disclosure are determined and do come over by the lender. So they send us their CD. We collaborate with that. We balance with that. We'll add the tax prorations and anything that we have control on our side. But those final figures do come over from the lender. It's important to know that because, as both Rob and Cathy mentioned, we need all the addendums. Because once you change that bottom line to the buyer, you might be up against a not amazing situation where closing is postponed, especially buyer paid commissions. Really, really, really important that you get that to us as soon as this is under contract. When we balance with the lender, CMJ says, yes, it's amazing, let's go. One of us will reach out for closing, and then we're headed to the table with the buyer package. Your 3-day only applies in a finance transaction, remember. that 3-day ahead for the closing disclosure does not apply in a cash. I know I get that quite often. Well, it's cash, where's my 3-day? We'll always get the CD out to you early, but you don't have that same requirements with a cash transaction. The other thing I just wanted to mention, piggybacking off on what Rob said, he nailed it on the head when he said that we are really, it's all about service. CMG to you is service, Great East to you is service. The partnership between CMG and Great East is service. We all know each other. We see each other every day. You are not a number on a screen or a agent on a purchase and sale agreement. We all have those relationships with you, and we will do whatever it takes to make your closing successful. I know that all of you will reach out to us for the buy side of the transaction, but please feel free to use Great East and your Great East title reps for more than that. I get calls on a daily basis when one of my agents is trying to put together a listing packet. You know, Danielle, I'm reviewing these documents from the registry. I'm a little unsure. Can you explain this to me? Or can you pull this for me? Or can you look at this property? We are really here to help you in whatever way you need help title-wise. If you need documents to, you know, wow people at a listing, call us. We can look at the registry. We can help you determine documents. So use us for whatever you need. That's why we're here. We're here to, you know, make your life just a little bit easier.
Awesome. Thank you, Danielle. That's great. Danielle, Ryan, Cathy, Rob, Marli, Chris, a lot of good stuff today. There was one thing I picked up on in there, and I just want to reiterate, because I know as agents, you guys are really good at those buyer broker agreements and getting paid what you're worth, right? You're getting that 3%. And I remember, Cathy, I believe you said something about you all need that paperwork. So when the lender needs that buyer agreement to know that you're getting paid, and the title company needs that buyer agreement to know that you're getting paid. So if you're getting paid on that side, sometimes it's a surprise. I think people were saying, you know, that the buyer is finding out about that number as a surprise at the end. Let's not have that. Let's get that number right in so that it's included with the loan, and they know all about that and what that number is going to be up front, and that way it works its way through the whole system, and it's right there.
And Angela, it's much better. I'm not, and I know Cathy isn't, we're not real estate brokers, so we can't always determine what your buyer, I don't even know what it's called, buyer relationship agreement. See, I'll stick to title.
Buyer broker agreement.
I'll stick to title. So really, if you could dumb it down for us, I'm getting 2% from the buy side. I'm getting another 0.5 from my buyer. Please really make it as simple as easy as possible for us, so we get that information correct.
Super, thank you. So guys, we've got a few minutes before we've got to jump here. What kind of questions do you have? What can we do? You've got some experts here. There's a lot of experts on this call. What can we help you out with? I know we've got some offices in there if you guys want to unmute. And if you want to unmute and join in, or if you want to raise your hand, I'll call on you either way. Or there's always questions. So I'm going to do what I usually do then when I'm going to do this. Nancy Walsh, I'm picking on you. I saw you come back in. So Nancy, if you want to join me for just a second, because you were one of the ones that really wanted to have the, you know, you thought this was an important call for us to have. And it kind of sprung from you having Rob at one of your sales meetings and some of the things that he was bringing up. Is there anything that you want to add into this and give everybody for information on how you're using CMG, or things that you think are important right now in this market?
I know firsthand that when I have listings and I'm getting purchase and sales, the first thing I'm looking at is the pre-approval and who is it? Where are they? Is this a company I recognize? Is this piece going to fall apart in the transaction because of the lender that we chose to do business with that we know nothing about? Regarding, you know, CMG, you know, they always take care of us, always. Somehow they make it work even when there are difficulties with the loan. I can always count on them. Doesn't matter, 7 days a week, morning, afternoon, night, flipping programs. The communication also with CMG to the other agent involved on the buy side, on the list side, is also, I think, handled really well, like always keeping them informed if we have a problem or we have to change something. They're my go-to lender always. And I just, I always counsel the agents. It's all the parts of the transaction that have to come together. It's not just one part. So who your partners are, who you're using, to me is key, absolutely key in the transaction. And I think we've all been there when we've had the transaction get to the end and then we have a major problem. All your client remembers is the last 48 hours, not all the good things you did, not jumping through hoops, not all the calls, texts, it's the last 48 hours. And they'll remember it as all the stress. And so that's why I make sure that when I'm dealing with the partners, I'm not going to have that problem. But like you said, when you're on the list side, you've got to deal with the people on the other side. And you can almost just know between a title company and a lender, like, oh God, I'm going to have to hold my breath the whole time. So, you know, CMG has a phenomenal reputation. When we were getting 20 offers on a house, I was just like so excited to see 12 of them have a pre-approval from CMG. I was like, so.
I've got on mute to talk. Thank you, Nancy. I appreciate that. Casey Hardwick has a question. Before I bring Casey in, I'm just going to remind you all, next week we have Denise Whitney and Rebecca Mann are doing a lunch and learn on pricing strategies. So pricing strategies in this market. So if you want to learn more about that, need some help with pricing strategies, please join in with them next week. All the information was in Wednesday's bulletin. Casey, go ahead and unmute and please join us.
Hi, it's more of a statement rather than a question. Going to the Grady's title side, something else that is really great to have them do in advance of taking a listing is having them review a power of attorney documentation to make sure it has the right language in it for sale of property in the state of Maine. Not all of them do. So they're really, really good about that. On the CMG financial side, when I see those prequals come through for a lender that I know has habitual issues getting to the closing table and overpromising and under-delivering, I certainly prepare my client for that and make mention that, you know, if we need to switch lenders midstream because there's a delay in placing an appraisal, which has been happening. And in one case, I had a lender actually cancel a deal 3.5 weeks into it because they couldn't place the appraisal in this area, and CMG got it done in 24 hours. So they are very happy to pick up where another lender has failed and still get you to the closing table on time. They've done it for me numerous times.
Thank you, Casey. Appreciate that. If nobody else has anything, we will let you all go. We'll see you. Oh, Amanda Blackwell, I've seen CMG work miracles so many times. It's amazing. Thank you, Amanda, for chiming in. So we'll see you next week for the Lunch and Learn. I will send out an invite link for that. And then in 2 weeks, our next company-wide call is going to be a top producing agent panel. They're going to give you some time management tips and some other productivity tips that help them be successful. So see you guys next week. Thanks so much. Bye.